I am ready.
Okay. Okay. Hi, Todd. Thank you so much for joining me today. I really just wanted to get on here and ask a few questions that I have been getting lately during this COVID-19 time. So will you start by just introducing yourself and letting us know a little bit who you are and what you do?
Absolutely. Thanks for having me. My name is Todd Fitton. I'm with Vero Mortgage out of Visalia, and I've been doing this for about 17 years in the market and have a wealth of knowledge that I just can't wait to share.
Awesome. Thank you so much. So let me just jump right into these common questions I'm getting. So right now during COVID-19, more than ever, there's so much uncertainty, fear, and especially misinformation out there regarding our real estate market, mortgage interest rates, and what it's looking like to forecast the future of this industry. So my goal today is to allow everyone to tune in and hear firsthand from obviously a very experienced loan officer what's really going on with some truthful firsthand information. So my first question is, what are interest rates doing right now, and is this still a good time to buy?
Yeah, absolutely. It's a great time to buy still. With the uncertainty that's in the market, I would say the advantage that I'm seeing is if you are a qualified buyer, it actually gives you the opportunity to get into a home without all the competition that you would have had 6 months ago or 7 months ago. We're seeing offers now where there might be 2 or 3 offers out, whereas before we were seeing 10 offers, that we were competing against with our pre-approvals. The rates are still fantastic. They're probably even a little bit better than they were 3 months ago. They've been holding pretty steady for the last, I'm going to say, week and a half. And I see that probably holding, for the next couple of weeks anyways.
Perfect. Awesome. Thank you so much. I think that's going to clear up a lot of questions and fear that some of, especially my buyers, have right now as far as interest rates. So thank you so much. I also wanted to ask you, what would you say to someone who is concerned that the housing market is going to crash very soon?
Yeah, I'm hearing a lot of the same fears, and the crash aspect, I just don't see. It's kind of hard to explain. When you're looking at a crash, you're talking about a run on the banks, a run on the market, investors going bankrupt, guidelines changing drastically, similar to what we saw in 2008. We're not seeing that now. We are seeing guidelines change, but it's short term. And the reason it is short term is when rates dropped back mid-March, beginning of mid-March, we saw an amazing amount of applications for refinances that came in, and that overloaded all of the investors. They had more applications than really what they wanted to deal with, and it made it to where they didn't really need to lend a whole lot. They were able to increase their interest rates to slow things down. They made it to where we were having to pay points for the same rate that we got 2 days ago. It was something that we hadn't really seen in this market, in my experience, ever, as far as just the disparities between the interest rate from one day to the next. It was really insane, to say the least. But when we're looking at the market and what's happening right now, it's happening because the investors are trying to slow everything down. They have more business than what they know what to do with. They're not having to take the risk on the lower FICO customers. If you've got under a 660, you're going to have to pay. If you have over a 660, you're probably fine right now. Our first-time homebuyer programs are still there. They still exist, and that takes care of a lot of those clients as well. Going forward, where I see it changing is as these refinances that hit that market in that 2-week window, as they start to fund and leave the pipeline, these investors will start loosening back up because now they need more loans. Like I said, though, rates are still good. They're not horrible. We have seen them rebound a little bit, not to where we were back in March, but close. And I see this all just kind of tabling off and plateauing a little bit for probably the next month until this whole COVID-19 is out of our hair.
Okay, great. Well, thank you so much. That really puts it in perspective as far as comparing the past to what's happening now. And I really appreciate you going into detail on that. One thing I've also had specifically clients have been asking me are, how are appraisers handling appraisals to still accurately price homes and contributing and keeping the public safe? Can you give us some insight and understanding from what you've seen since all this COVID-19 started with appraisals?
Yeah, the appraisals is definitely a unique situation because in order to get, a good value, they do need to come into the home. And that is something that a lot of people don't want right now. They are taking their precautions. People, for the most part, understand that you have to have an appraisal in order to finish a transaction. So we don't catch a lot of flack on that. The appraisers are going in, they're taking the precautions necessary, they're not touching things, and they're in and out pretty quickly. I mean, they're really in your home for just 5 or 10 minutes, taking a few photos, and then they leave. So they don't need to be touching a bunch of stuff. They don't need to be opening a bunch of doors and messing with your stuff. Even the re-inspections and stuff that we've had recently, we haven't really had any problems, and all of our values are hitting. The one thing is, if the market does slow down more than normal, obviously that's going to create a situation where they don't have as many comparables to work with. But they've got a window of 6 months. So as long as we're not in this for a 6-month window, God help us all if we do, we should be fine.
Okay, yeah, that makes perfect sense. So also, Todd, will you explain the difference between forbearance agreement versus balloon payments in regards to current mortgages right now with financial institutions?
Absolutely. So a lot of people are under the impression that these forbearances are free money, that they don't have to make their mortgage payment, no harm, no foul. Once this is all over, they're good. They just pick up where they left off. There's a lot of uncertainty with that right now. And the reason being is the banks are going ahead and the investors are going ahead and they're giving forbearances on these mortgage payments. But what they have not disclosed is what the long-term impact is going to be. So as of right now, what we're dealing with is, and when the agreements are coming out, is you're seeing, okay, I get 3 months forbearances, but that 4th month, I owe all of those payments for the previous 3 months. So that can actually put somebody into a financial hardship at that point, and now you're going back to a full-blown loan modification, which can impact you in the future from buying another home or selling your home or something like that. The issue that we're having, and I did hear a little bit of good news actually today, is that they are going to, hopefully with the task force they have in place, they're going to put something together to help the investors, because the servicing entities that we have, they're the ones that are giving the forbearances. But the problem is they still have to make that payment to the actual investor. So you have your servicer and you have your investor. The servicers are the ones that are allowing you to go ahead and not make your payment, but they still have to make that payment to the investor. So it's really putting a financial hardship on them, which is why right now they're like, no, you've got to pay us back because we need that money back. So we're trying to, I'm not going to say discourage people from doing it, but just really educate them on the consequences of doing it right now until the servicers have something in place from the federal government that gives them some kind of, forbearance, for the lack of better terms. That's the word that's out there, to give them some relief so that they don't have to have that same financial obligation, and puts the strain on them, and a lot of them could go bankrupt over time. If we see that happen, cool, that should put something in place to where we have a little bit of insight into what our credit situation would be for not making these payments. As long as we can make them and it doesn't affect our credit, type of a mentality. But really until then, I would definitely keep making that mortgage payment, because as of right now, you will have to pay that mortgage payment back in a lump sum once that time period is done. So if you're out 12 months, they give you a 12-month forbearance. Well, in the 12 months, as of right now, you'll have to make 12 months payments all at one time. Or they'll have to set it up on a payment plan over 3 months or 6 months or maybe another year. But you're making, you're basically doubling your payments for a year. And I don't know many people that can afford to do that.
Yeah, exactly. Yeah, that's why that was a really common question I was getting, because I think some people were seeing out there, especially on social media, that some financial institutions were willing to, I guess, forgive mortgage payments. But I think there's a lot more that goes into it. Like you said, there's a servicer, there's the investor. So knowing and understanding that pipeline, I think, is really important for all of our clients out there.
Correct. There's definitely no true forgiveness when it comes to a mortgage payment. I mean, because there's a note that's attached to that that gives the terms of that mortgage. And unless you alter that, that stands. That's what's legal on it. So if you skip 12 months payments, it's still due in that same 30-year period. Your end date is still the same end date. So unless they have come up with some kind of a plan to alter those notes, or they have an across the board, change on that, there's way too much uncertainty right now for me to recommend anybody that this is a great idea.
Okay, definitely. Thank you so much for that. My final question is, let's talk about refinancing. So who is a good candidate for a refinance right now?
The people that I've been seeing refinances from the most are really your streamlined refinances within the last, I'm going to say year and a half. And the streamlined refinance is an FHA loan that, probably has a rate of, high fours, low fives, maybe even a mid four. Because the refinance rate on an FHA right now, we're in the low to mid threes, just depending on credit and everything. Your conventional clients, people that are wanting to get out of mortgage insurance, I'm actually helping a ton of people right now that have only been in their homes for 2.5 to 3 years. And they've got enough equity from what the market's done for them. And just with rates being as good as they have been, I mean, conventional rates were in the 3.5 to, let's say, 4.25 range, depending on credit. So really anybody that's got like a 4.5 to 5%, 5.25 rate right now and above, we're helping tremendously. I mean, we're saving them anywhere from $200 to $400 a month, just depending on what their situation is.
Wow, that's a huge change.
It is. That is helping more people than a forbearance will. So I'm actually encouraging people that if it's something that you're interested in and you want to save money, let's look at the equity in your home and see what we can do with the equity in your home. Because a lot of people have enough equity that, we might be able to pay off your credit card debt. We might be able to pay off an auto loan and free up, $500, $600, $700 a month in payments and really not change your mortgage much, if at all, because the interest rates are so low. So refinancing is great for really anybody right now. And especially those clients that have really top-notch credit, the rates are definitely in their favor because the investors want those good credit clients.
Absolutely. Wow. Thank you for that. I appreciate it. Well, thank you so much for all this information. I'm so grateful that I was able to spend some virtual time with you today. I've had so many questions come in from my clients and other associates of mine. So I'm so grateful that I have you as a resource for firsthand truthful information to just keep us updated on what's going on in the world of home loans and mortgage rates during this COVID-19 coronavirus situation. So do you have any closing remarks for us, Todd?
No, just let's all stay together on this. We are in this together. If you have any questions, definitely reach out to me. I'm pretty bored these days because I don't get to leave the house. But so I definitely offer my services up, not just to do loans, but really just to answer questions because there are a lot of questions out there that even go beyond the ones that we discussed today. So I encourage you, your clients, anybody that family, friends that might just have a question, have them reach out to me. I'd be happy to answer them.
Thank you so much. I really appreciate you being a resource for me and my clients and everyone out there. So stay safe and healthy. Have some fun with your family while you can in isolation. And thank you again for your time today.
Thank you so much.
Take care.
Bye-bye.